So today I'm going to talk about a new stock that I have added into the portfolio. I did this around about 2 weeks ago. I've been tracking it for the last kind of 2 months, and about 2 weeks ago I thought, okay, this is the time to add it into the portfolio. It worked well with a few stocks being sold, and also I had the cash available. So with that option there, I took the advantage of buying this stock, and I do really like it. Now I'm going to say that I do want to have this stock a little bit cheaper, and when I get on to talking about it, I'll show you exactly where I want it. But hope you enjoy the video as always. These videos do take a while to put together compared to the normal ones, so just hit that like button if you could, and we'll get started. Now I'm just going to shout out the Black Friday deal is on to Friday. There's 100 places out there. Last year we did 16% off. This year we're doing 35% off because we're going to be able to do it through PayPal. Now because it is through PayPal, it doesn't give you access to the Patreon as such, but it will give you access to the Discord, and the Discord will be, as you can see here, if you go on the JKR post, you'll be able to get all my posts about what I'm buying, all the exclusive content. There's going to be over 100 exclusive videos on there in 2024, and it's £39 a month for that exclusive content, my live balance sale alerts, and the Discord community as well is absolutely amazing, because this stock that I bought today actually came through the Discord community. It was recommended on the stock request, and that's where members of the Discord vote for me to take a look at a stock. And I did this stock request around 2 months ago, and then eventually when the opportunity was right, I did buy into this stock. So if you do want to join that, then send me an email, jkrinvesting@gmail.com. There's currently 33 places taken up, so we are down to the last 60 or so places there. So if you do want to sign up, it is running to this Friday. But let's get started on this stock. And as you can see here, as the post said, on the 9th of the 11th, I've also blanked out a couple of other buys that I made on that day, but you can see here I started a new position in YouGov, and you can see here that I did the stock request video around 3 weeks ago where it got my attention. Now there's actually another, because of the Discord, there's actually another 2 stocks that I'm actually really interested in. The only thing that I'm weighing up is that they're in similar kind of industries that I already own, but yeah, that's another topic for another day. So YouGov itself has actually been on the stock market from around 2005. In the last kind of few years, it is a stock that has performed really well in the stock market, as you can see here. Has been a 10 bagger over the last few years up to 2021. Since 2021, when a lot of valuations peaked, it has had that kind of reality check in the share price, as a lot of companies have done, and you can see here the stock actually fell 54%, and recently the stock has started rallying back up again. Now I am currently up around about 10%ish on this position, so that's something to kind of bear in mind there. But for me, I would like the stock to go a little bit lower. I want it to maybe drop another 10-20%, and then I can build up a position. So I am actually, if it does go higher from here, I probably won't buy any more shares. It's a stock that I would like to see go a little bit lower, so we'll see what happens. As you can see, it is profitable and trades at 33 times earnings. Obviously with 33 times earnings, you're looking, is that kind of a rich valuation or is that a fair valuation? And we'll look at that today. 1 billion market cap company, so a decent size for a UK company, and you can see there is a dividend on this stock that is paid out. Now YouGov itself, I ended up watching the whole, they actually did like a capital markets day not too long ago. I think it was around about 3 months ago that they did this. So they did this here. It's around about 3 hours long, 3.5 hours long, and honestly, this here, you'll get so much more information on this video about it than what I can give you today. This is definitely worth watching to kind of get an idea around where the business is going, what they've done, the whole kind of deal around the platform. That can give you a lot more information. I'm going to just try sum it up in around 20 minutes for you guys, but definitely worth a watch. And after watching that, if you're not impressed, I don't know what can impress you, because it was a really, really good capital markets day. But basically, YouGov is the pioneer of online market research. You probably see quite often when you're watching maybe the news, the media, or you see something mentioned, they'll mention some data and they'll say it's from YouGov. YouGov has become the pioneer of online market research. So before YouGov, you can see there was an issue where polling was inaccurate. So you're seeing some results that were forecast and they would totally be wrong, and they weren't reliable and easy to get. What YouGov have done is they've made them very close to the outcome, very reliable research, and now you can see them trusted on many media sites, or even companies themselves are going, you know what, we need to get access to this data. If you're looking to launch a product, or you're looking to potentially see what the market's at, rather than just launching a product blindside, you're going to do the research. You're going to go, okay, so what are currently the generation that are maybe 18 to 24, what they kind of feeling, what's in fashion for them. If I'm going to launch a energy drink, what are they looking for? What's the priorities? Is it more around the taste? Is it more around the appearance of the actual can? Is it more, and all them sort of things? So it's really important that companies use market research, and what YouGov are trying to do is create that reliable space for the market research. And I'm sure if you've ever gone on the YouGov site, obviously we're using this for public data, but as you can see here, they have the for business, where if businesses want to get access to surveys or run their own custom research, as you can see here, this is the new platform they've launched, and you can get any sort of information from here. So if you look in here, you can see for like political data, the government approval, and you can see it's very low at 14%. You can see how popular figures are. So like if you're a company and you're thinking, well, we want to run a brand deal with Boris Johnson, is that a good idea to do a brand deal with Boris Johnson? You can see right now his popularity is around 29%. So it's like, it's probably not a good idea to maybe do it around Boris Johnson. For example, if we were trying to find someone a bit more popular to do maybe an advertising with, you can see here, oh, well, The Rock is, or Dwayne Johnson is more like than Boris Johnson. So maybe that's something to be better to look as a brand deal. So you can see here how companies would want to use all this data potentially to help them be a successful product, or working with deals or anything like that. There's a lot of potential for companies that need this market research. And the company has a very good track record. If you look here, if you look at the revenue growth in the last couple of years, even before the CV situation, they had around about a 17% CAGR. Obviously, if you look at the financial half, this is where this one's taken from, financial half 23 results. They're already getting close to what they were doing in 2019 in half a year, which is obviously really good to see. Profit margin as well is moving up as well with the revenue. As you can see, operating profit margin has been moving up. So they are doing very well from an operational profit margin. Obviously, at the moment, sitting at 16%. And as well as that, because the profit margins are extending as well as the revenue, the EPS as well has been growing at 28% CAGR, which is probably the more impressive thing as well, which is obviously fantastic to see. And obviously this is from financial year 19 to financial year 23. And here you can see the products that they have. So they have the data products, and you can see the data services, and then the custom research. So you can see how much that makes up of every category inside the business. Now they have set out their new longer term growth plan from the Capital Markets Day, and you can see the medium term revenue is to go to 500 million. Now, as you can see on the last year that we just showed, they actually did 221 million. So they are forecasting in the next 3 or 5 years to see nearly a double up in the revenue. Also, from a profit point of view, you can see they're trying to get their operating profit margins to 25%. And if you look at the current operating margins, they're currently at 16%. So that would suggest there's going to be around another 8% increase, 9% increase in potential profit margins. So obviously what you'll have there is revenue growth still very attractive. And then from a profit point of view, if they can keep increasing those profit margins, they're also going to be in profit increasing, but in profit's going to be increasing rapidly as well, which is really good to see. So that's obviously really good to see. You can see here they are going to maintain a progressive dividend policy, which is obviously worth factoring in, that they're going to focus on increasing the dividend, which we will look at in a second. And they're also going to target small to mid-sized M&A. We'll look at some of those M&A targets in a little bit. Now, the big thing they're going to be targeting is the US. So they've become a very successful platform in the UK. If I show you here right now, there's a revenue by sector, and you can see technology does make up a good chunk of the company's revenue. And we've seen them actually pull back the spending a little bit in the last 12 months. So the fact that they've been doing these numbers in that sort of time frame is obviously really good to see. The other thing is the revenue by region. So you see here the UK makes up a good amount there, and you see Americas makes up a good chunk here, but they've still got a lot of the Americas market to go for. So it's currently a 20 billion market size, and you can see at the moment their revenue is 100 million. So they're really only scratching the surface of potential market research in America. There you can see 30 of our top 50 clients are based in the US, so a lot of their clients are in the US, so if they can keep getting more money out of them, obviously that's really important. And you can see that they're 48% year over year growth in revenue from the top 30 US clients. So that's where a lot of the growth has been driven from in the US, and obviously there's a lot of expansion for them to go. And they're seeing that as a bit more of a fragmented market as well. And obviously the big thing as well, that you got our pricing here with YouGov, 2024 should be a really good year. What's happening? Election year. 40 countries are having an election in 2024. Now, obviously, what a lot of newspapers, medias, and elections candidates are going to be looking at is the data. They're going to be looking at YouGov and going, okay, if we look at the state of New York, what's currently the consensus of who's voting for who and how close it is? Oh, that's really close. Oh, you know what? If that's really close, we could win that state. Let's go focus the campaign on there. Same on the UK side of it. When we have an election probably in the winter of 2024, the Conservatives and Risk Unite, they're going to be looking at going, oh, what state is a very close state, a close constituency? Look at Wakefield. It's 50% swing between Labour and Conservatives. Let's focus on that area. So as well as that, that's a massive tailwind that's coming up in the next year as well for this company. So the big area they're going to be focused on is definitely that US growth. But the other thing as well is potentially the European growth. So they're very good in like the likes of UK and France, but moving to more like Eastern Europe as well, there's potential to expand there, as you see, and not a lot of it is making up their revenue and profit at the moment. So the fact that they can basically drag and drop this platform now in other countries, obviously they should really help them. And another thing they're going to look at doing is they have a proposed acquisition of GfK, and this is going to be basically they're going to look at expansion into America, and then if they also have the double whammy of having expansion into Europe, then obviously they can become basically the number one provider of all this data here. So they're actually going to look at potentially acquiring GfK as well, which could be a big expansion for them into Europe. Now, obviously, when you look at the company itself, from a valuation point of view, it's currently 34 times earnings with 85% gross margins, as you can see here. If we do look at what the historic P ratio has been, obviously at 30 times, it's normally, apart from the big jump that it had in 2021, as you see before the CV times, which is the best comparison, it did trade at around 30 times there. So it's historically about what it trades at. So that's obviously good to see. From a growth point of view, you can see analysts at the moment are expecting, obviously a very good track record, but are expecting that expansion to really start kicking into the revenue. They are expecting 344 million next year with 40 million profitability, which would be a increase as well of a good amount. And you can see they are forecasting the revenue to keep ramping up as the years go on. Financial health wise as well, very good balance sheet. When you look at the balance sheet here, there's no debt on the balance sheet as well. They sit on 107 million of cash, which is obviously really healthy. When you look at the dividend point of view, you can see here where the dividend has been hiked up in the last few years and is forecast to continue getting hiked up going forward. And they have a relatively low payout rate. It's around about 28% as well, which is obviously really good to see. And the chairman of the board actually owns still 7% of the company, and he's also the co-founder as well, which obviously is really good to see, good insider ownership inside the business as well. So let's have a quick look at some numbers here. So as you can see here, analysts are expecting around 458 million in revenue. I've actually got down here for 2026, 495 million on the high side, and on the low side, 460 million. So my forecast here are pretty close to what analysts are expecting. So I've got around 10% revenue growth, 15% revenue growth, and 20% revenue growth. Profit margins, I've got 13, 15, and 17%. Now, considering they actually do 13% right now, as you can see here, I don't think that is too bad to consider that the low side has what they have right now. And we saw from the investor presentation on the long term, we are expecting the company to do 25% operating profit margins. I think that's fine to estimate around that much, the improvement in the profit margins. 500 million in revenue medium term, 3 to 4 years. As you can see here, that's roughly what analysts are predicting, and that's roughly what I've got guided in my figures, as you can see here. So I think these are pretty good figures. And as you can see here on the low side, I'm getting decent 5-year upside on the worst case scenario, which is good to see. I always say on the worst case, we still want to see some return. On the medium side, getting some good side up there. And also on the high side, we're getting the 100% return, as you can see here. And like I said, this doesn't factor in the increased dividend policy that we just mentioned as well. Now, obviously, the big thing is this is trading at a 20 times earnings multiple. Now, what do we see about YouGov? It trades at premium. I think if you're doing those sort of numbers, you are going to trade at a premium. YouGov currently trades at 33 times earnings. And as we showed a little bit earlier on the valuation point of view, it does normally trade around 30 times, 40 times earnings. Pre-CV, it was actually 30, 40 times earnings. Now around 30 times earnings. So this is actually conservative on a valuation basis as well. which is obviously really good. Now, if I actually do assume a bit more of like a premium inside the company's earnings, you can see here this is actually where the big real return is for the company, is if they do go back to trading at a premium. Now, I'm not going to assume they trade at a premium, but if they do, which I think it will do, then obviously that's where the really good returns do come from the company. Obviously, I want to be a little bit conservative on the estimate side of it in case something does go a little bit wrong. But you can see from here, even if they are to perform a little bit lower than what's expected, it still looks like there's some upside inside the company. So yeah, I do really like YouGov, and especially with the tailwinds as well of the election year as well, it should be a pretty good year next year. So yeah, I have been buying some shares in YouGov. I would like I said, I would like them a little bit lower from here, maybe 10-20% lower, but even at these levels, I still think it isn't too bad at all. So yeah, I have been buying some shares in YouGov, and that is the new position into the UK portfolio. I hope you enjoyed the video, guys. Let me know what you think about YouGov, and if you could hit the like button if you're new around here and you did find it helpful, subscribe, and I'll see you all in a bit.